In this video, we're going to take a look at a simple but effective idea of support and resistance when it comes to price charts. Hello and welcome back to this video, the latest step in our technical analysis course. I'm David Jones, and we do this on a weekly basis with Trading 212. This week is one of my favourite topics. We're going to look at the idea of support and resistance in the markets, how it can help us figure out turning points, entry points, stop loss points, all of that sort of stuff. Now, I think support and resistance is ignored, or at least not given the weight it should be, by plenty of new traders. They're too busy focusing on the Fibonacci levels, Bollinger Bands, stochastics, MACDs, pivot points, all this sort of stuff, and they miss out on this basic bit of market information. So because I think it's so important, we're going to have 3 different chapters on this. So this is the first one. So we're going to start off, first of all, let's look at the principle of support and resistance. It's really easy. It's where the market decides where maybe things have got a little bit too expensive, maybe things have got a little bit too cheap, and reacts accordingly. You know, for example, if last month the price of oil fell to $45 and then rallied and got pushed as high as $50, if it starts going back towards $45 again, the market saw value there a month ago. We want to see, does the market see value there again? The expectation is we're going to see the buyers come back in. But first of all, let's look at the theory, then we'll look at some real examples. So first of all, let's take a look at the theory. So we have a market, let's draw a market that's going down. Hits the level, rallies, and as we get used to, runs out of steam. So this level up here, this is known as resistance, a level where the market's rallied to before and it can't get through. So some people would see a failure at resistance as an opportunity to sell short with stops above. Let's say the market then starts to decline again, like it did last time round. We have these old lows down here, and this can be any sort of time frame, you know, weekly, daily, hourly, 10-minute. You will see this idea of support and resistance across the board. So the market comes down, we may see the market rally, doesn't break the old low, so we have the potential for support forming. So again, some people would see this as possibly an opportunity to buy with a stop loss underneath the low, and it's as straightforward as that. So there you have it. There's the theoretical version. We're going to look at some real examples in a second, but plenty of people in the comments on previous videos have said, what if you could use just one indicator, what would it be? Would it be Bollinger Bands or stochastics or MACD? It would be none of those. You know, I would focus on support and resistance because it's the market telling us you know, exactly where there is supply and demand, where there have been buyers and sellers. I could do 10 hours of examples on this over the last month, but I've picked 3 popular markets, long, medium and short term, just to show you how this idea of support and resistance plays out over these time frames. Let's take a look. Here's a long-term example, first of all, of resistance. This is the price of oil during 2016. We're looking at here, each candle represents a week's worth of trading. What I'm interested in, what was happening at the end of 2016 and early 2017. Look what's happening here. These are weekly candles. It has a go at trying to break $55.20. Can't do it. A few weeks later, comes back to it again. About 6 weeks later, it's back to it again. So we have a definite level of resistance. Let's just pick up on that. So here's our level. Let's move forward in time. Just see what happens next. So the market sells off below $48, then comes back, has another go at that resistance. So again, people who think this resistance is going to stay in place might be looking to sell short with stops above. And you can see that would have worked. The market did sell off. It proved to be a really big level at the beginning of the year. And what's interesting, as we head towards the end of 2017, we're back up here again. You know, so how is this resistance level going to perform? An interesting one to watch. Here's a slightly shorter term example. What we're looking at now, we're going to look at support. It's a daily chart of euro dollar. This was during the strength that we saw from April 2017. This is to the end of August, and it starts coming off. We think, okay, where might this market stop? What we want to pick up on is previous support. I think there's an obvious one here. It's the dip down towards sort of 116.50 before the market rallied more than 400 points. So let's just pick that one up by picking up our horizontal line from up here and put it underneath those lows. So here we are. So traders will be watching this level to see how the market performs if it heads back down. Does it end up being support again? Because this market is so strong, that is what we'd expect. Let's jump forwards. So we're now in October. The market's come off about 400 points. We're back down to that level, and we are seeing maybe the slide stopping. So a trade here would be to be a buyer with a stop loss underneath that old support. Let's jump forward a few more days. Okay, it's a short-term move, but the market does move higher. It moves a couple of 100 points off that level. So far, that support has done its job. What's interesting now, in November 2017, is what's happening with that support level. You can see the euro has actually slipped below it. We've had one day where it's slipped below, and we have seen something of a recovery. We'll come back in a later version about how to trade these breakouts, but hopefully we can see there how this support did prove to be a good entry point. For the final example, we're going to go much shorter term. We're looking at the US 30 market here, the Dow. Been an incredible rally since the presidential election in November last year. But again, looking at this strength, we can pick up on previous support levels. Let's say we were looking at the market here and it ran from 23,270 as high as 23,490. So again, a sizable rally. We might be thinking, well, where's the market going to stop when it sells off? We pick up on this old support. Now, admittedly, the market did spike below it by maybe 10 or 12 points, but hopefully you can see the principle here that these old levels can come back and prove to be big levels to trade off. You know, this was back on the 23rd of October, and then looking here, this is a couple of days later, we see the market once again hold. Let's jump to the end of our chart. So again, we can pick up on various support levels. So we've got support here, 23,321, a bit of support there and some more support there. So once again, when we walk this chart forward, if we see the market start to sell off, what we're looking at, how does it react by the support? Does it give us a good entry point? Let's jump forwards. So on the 2nd of November, we saw a fair bit of volatility. The market sells off really hard in the space of an hour and a half, drops down about 100, 120 points. But where do we see the buyers come back in? We've got this old chunk of support from 23,320 through to about 23,350. So, and again, an aggressive trade here. We'll be buying into that support. And if we jump forward to where we are now, you can see that once again, the market has bounced back and actually taken out these old previous short-term resistance. And finally, if you're wondering what this is down here, this is the trade bird feed. So this is where you can see what other traders are saying about the Dow if you're looking at a short-term chart. And you'll see that on all the short-term charts in the trading platform. So it doesn't work perfectly, but it can give us an obvious area to look to initiate a trade, and an obvious area for a stop loss point, and an obvious area where if things have changed, we can see it on the chart. So we've looked there at some simple entry points. Over the next couple of videos, we're going to take a look in a bit more depth, first of all, about how to trade these points. Can we look for extra confirmation? And also what to do if we get a breakout, if things change, because that can be a signal just on its own. So, but for this sort of introduction to support and resistance, we'll start wrapping things up there. If you don't look at it, I think you should start looking at it, you know, in terms of where you want to place your trades and place your stop losses. But we'll develop this idea over the next few videos. As usual, if you have any questions or comments, or if you really disagree with how important I think it is, leave us a message down below in those comments. We do read all of them. If you like the video, click on the thumbs up. And to make sure you don't miss out on this series, you know, we've got this whole series yet to come of technical analysis and charting. But also, you know, do regular videos on cryptocurrencies like Bitcoin, the major FX pairs and individual equities. So to not miss out, if you're not subscribed, click that button there and you will get subscribed. But for this week, from me, David Jones and Trading 212, we'll leave it there, and I hope you have a good trading week.